This is being framed as the rate rise we had to have, and the big four banks have wasted no time in passing it on. The move by the RBA is ominous. We knew that cash rates couldn't stay at emergency lows forever, but yesterday was something altogether different. It smashes any illusion that high inflation is transitory and will wash through and readjust anytime soon. Higher prices are here to stay for years, and Australia might need to prepare for years of cost of living pressures and interest rate rises. Families loaded up on their mortgages, bought into potentially an overheated housing market, effectively on a promise that the RBA wouldn't increase rates to 2024. Joining me now is our business reporter, Ed Boyd. Ed, how did the RBA manage to get it so wrong?
Laura, this was a monumental stuff up from the Reserve Bank of Australia, and their economic forecasts have clearly been way out for the last year or 2 years now. So you just mentioned inflation. It's at 5.1% today, headline. The RBA now expect inflation is going to peak at 6% by the end of this year in Australia, and it's going to take until mid-2024 for inflation to come down to 3%. 3% is still a very high level for inflation in this country. We haven't had 3% inflation for a long period of time. So the Reserve Bank has got its economic forecast completely out of whack. This is Governor Philip Lowe yesterday just trying to explain how they made this mistake.
Interest rates are normalising much quicker than we thought was going to be the case. So from a forecasting perspective, that's embarrassing. We should forecast this better. We didn't. But what we did do in 2020 was make sure that we took every possible step that we could take to help the country.
And I believe at that press conference yesterday, the governor said they're now going to do a bit of an internal review into their economic forecasts. But the Treasurer, Josh Frydenberg, was asked this morning whether we should be critical of the Reserve Bank and its board for keeping the cash rate on hold for so long and now finally starting to lift it in the month of May. Have a listen to the Treasurer this morning.
Well, the Governor of the Reserve Bank and the Board of the Reserve Bank are independent of government, and that's why I wasn't critical in any way of their decision yesterday.
You're the Treasurer, though. That's surely a bad call. He's made a number of bad calls, surely.
Well, again, they are in control of monetary policy. We as the government are in control of fiscal policy. I'm not going to criticise the Governor of the Reserve Bank. It's for him to explain, as he did yesterday, what is driving his decisions and the bank's decisions.
Well, that explanation does seem inadequate. One thing that we don't have is those monthly reads on inflation like most developed nations. Perhaps that's where the politics goes today. But even so, as we see here this morning, Ed, the big four banks were quick to pass on those rate increases. Homeowners now being warned, expect plenty more over the next year, all the way to Christmas and beyond.
Absolutely, Laura. Look, when the cash rate goes down, it takes a long time for the banks to pass those savings on to customers. But when rates go up, they're very quick to lift their mortgage rates. So the big four over the last 24 hours have all lifted their mortgage rates by 0.25% in line with the Reserve Bank of Australia. Two of the big four, that is Westpac and NAB, have also increased their deposit rates. So their term deposit rates are going to be going up. So that helps people with a term deposit. But we've got a chart we can show you here just showing the extra repayments and Australians going to have to make each month with this increase from yesterday, up 25 basis points. So if you have a $500,000 loan, you're going to be paying an extra $68 a month. You've got a $1 million loan, you're going to be paying $136 more a month. And if you have a $2 million home loan, that's $272 more per month. And that, Laura, is just off a 25 basis point increase from yesterday. Westpac was just on the show earlier. They're expecting the cash rate to hit 1.75% by the end of this year. So just imagine how much more money people are going to be putting onto their mortgage over the next couple of months. And you're right, rates are going to keep rising for at least the next year as the Reserve Bank tries to deal with this soaring inflation.
ANZ Bank has just reported its half-yearly profit. Its cash profit fell 3% to $3.1 billion.
Cash profit for ANZ down 3%. When you look at their statutory profit, which is another way of looking at it, went up 10%. But I think ANZ have spent a lot of money over the last 6 months in their mortgage book and improving their mortgage loan granting time. So now it takes you 3 days to get a mortgage on average at ANZ Bank. That's come down significantly. You can see there their cash profit down 3%. Dividend was 72 cents per share, fully franked, and we should be hearing from ANZ Chief Executive Shane Elliott a little bit later this morning.
We both like both the Shanes, so that's okay. Ed, we'll check in with you soon. Of course, the market opens in about 55 minutes' time, so we will wait with interest to see what happens there.